So the focus on this panel is how Bitcoin mining is driving innovation in ERCOT. Before we get into what each of you guys are doing, I'm doing this in a little bit of a flip order. Yesterday, I believe, was ERCOT's Innovation Day. Was it their second one?
Yes.
Second ERCOT Innovation Day. Can you just kind of give the crowd a quick recap and what some key takeaways were or where focus was?
So ERCOT, for everyone, I mean, everyone in the room knows who ERCOT is, but they have started last year something called an ERCOT Innovation Day, and it brings together stakeholders, from throughout. Oh, a little closer. Thank you. So, the way that ERCOT describes this is that they're bringing together all of their market participants. So you have energy suppliers, you have load customers, you have folks providing, different services to the grid, you have technology companies, everybody sharing the room, getting an opportunity to engage with ERCOT in an informal way. So normally folks engage with ERCOT, through formal committee processes, et cetera. But these were panels where you have the same folks that are in those different committees and in those working groups, but now they get to just have a conversation. And it's really a great way to get a window into their world, into what the current thoughts are, sort of ahead of when things become formalized. I'll also note that Sean here at the end, he was also at the Innovation Summit, and this was actually his second year, so he probably could compare and contrast a bit more. But the key themes, which is probably no surprise to anybody in this room, is around load growth, and it's around how are we going to solve this, what is a challenge and an opportunity for everybody there. They're seeing the amount of load growth, and they're just saying, how does this get solved? Does it get solved with things, improvements in permitting processes, and getting new generation online more quickly? But I think one of the big themes from the day, comes back to something that Bitcoin miners have been the pioneers on, which is load flexibility. So we had a lot of conversation about, and there was some comparison and contrast with other ISOs like PJM and MISO, where they actually have made more progress with demand response relative to ERCOT. And so, Pablo Vegas, who's the CEO of ERCOT, saying, how do I get more of that? How do I, get demand response? His quoted number for the day was they want 20 gigawatts of demand response in ERCOT. And I believe, Sean, you can correct me if I'm wrong, we're like 3 today, right?
Yeah, 3 or 4 gigs here in ERCOT. And I'll just, you did a great job summarizing. I'll just add that, the load flexibility part is a big part of the discussion. And one of the comments that I heard multiple times was ERCOT doesn't have an energy problem, it has a capacity problem. And so there's plenty of energy to go around from a megawatt hour perspective, but we have these few periods throughout the year, a small percentage of hours where we need the flexibility for load to come down and, so that the grid can stay online and reliable. So that's the only thing I'd add. I mean, I think it was a good discussion. They talked a lot about AI as well and integration and how they're using AI to solve some of the problems that they have. But I think it's funny that AI is a big energy suck, and you're using AI to solve the problem of the energy that you're consuming in a massive way. So,
before we get into the specifics of how Bitcoin mining is driving innovation, could each of you, for the group here, just help ground in your business and what you do and how you interact with Bitcoin miners, and maybe starting with Sean on the REP side?
If I could just 1 second, just to add on what you guys were saying. I was not present, but just something I think that does not go stated very often in a lot of discussions like this and a lot of content like this. Days like yesterday, right, when you get a room, the ERCOT Innovation Summit, we often get lost in just saying things like ERCOT or Encore or this is problematic, right? Or SPP or MISO. There are brilliant people that are in that room solving very real problems that are not easy, right? So the problems that we're discussing as it relates to us, think about it, is only 10% of the grid, right, to 5% of the grid on peak. So we're talking about, yes, it's that last mile of innovation and technology that's kind of driving this stuff, and we'll talk about that. But I just want to give some credit to the people at ERCOT, at the transmission levels. They're brilliant people solving very, very, very difficult problems, and we want to move fast and break things. And I get that as an entrepreneur, as somebody who's trying to participate at the leading edge of you guys from a clientele standpoint, but the problems are hard. And I think we need to take just a minute and say, hey, there's really, really good people at work here. So I just wanted to remind everybody of that.
Yeah, I think one of the things that I've come to appreciate is that with Bitcoin, everyone's taken money for granted. Never really question why it exists or how it exists. What it is. But the second thing that they take most for granted is the complexity or energy, but then also the complexity of a power grid.
Yeah, the human element as well. Like
that every time we flick a switch, the light bulb turns on. And when you got that with 35 million people all at once, massive amount of complexity. So, but I think it would be helpful for each of you guys to quickly describe your business so everyone here has context as to what hat you wear within the ecosystem and helping to deliver value. Sean, do you want to start?
Sure. So Sean Andrews, I work with Amber Power. We are an international energy company focused on the energy transition based in Mexico City. A few years ago, I was asked to join the company to lead the entry into the ERCOT market and eventually the United States and just kind of going into other deregulated markets. There's a couple of things that we do. We have an in-house digital team that does a lot of customer reporting for our customers. It's something that has trickled down to some of our clients in this space. We do, in Mexico, we've built a couple of industrial parks where we sell capacity and energy through those parks, mainly to data centers, but we also have our own small mining operation, 2 megawatts growing to 12, that the company really believes in having some skin in the game and believes in the space and has an infrastructure fund that's associated with kind of growing within that space. I think energy companies are natural owners potentially of physical mining operations, and it can be a good hedge to some of the things that we have in our portfolio. My day is mostly focused on supporting the industrial loads that we have in the ERCOT market. I do lead the Houston team, but I am heavily involved with the structuring of contracts, developing products, and really just making sure that we're providing excellent service to our clients.
Scooter Womack, Vega Energy Advisors is our firm that we founded about a year and a half ago or so. And a lot of our participation, a lot of the folks that we serve, that we work with from an advisory and consultation standpoint, and on the brokerage side are Bitcoin miners. We certainly serve other large C&I customers, upstream oil and gas, midstream oil and gas. That was kind of my origin story or background. But 2.5 years ago, this was just something that was an undeniable direction for me to go as it relates to Bitcoin and large compute load, what it was going to take to serve it well, the creativity it was going to take to structure products well for these customers, because those loads are unlike anything else that we have ever seen. And I think we're going to hit on some of that is the technology of Bitcoin and Bitcoin mining and the ecosystem that has spun out of that and that constantly spins out every single day. So cool, but it's driving and it's dragging legacy systems and dinosaur systems forward, and that gets really uncomfortable. For those large systems that are already in place. I think Gideon was talking about, hey, these systems are set up to really not change. That's a true story, but it doesn't mean that you can't have that. You shouldn't have that innovation forward. And so, from us on the advisory side, we really like to dig in every single day, not just kind of put a deal together with a guy like Sean and move on. You've really got to have a good partner who knows kind of what they're doing.
So Austin Mitchell, co-founder and CEO of Snowda. I'll mention first, had the opportunity to work with both these guys on stage quite a bit, and you can't be looking at two better experts and professionals in the space. So highly encourage folks, they have questions around power and understanding the rep game, that you reach out to them after the panel. For me, I spent the first 15 years of my career working in the energy industry. I started in oil and gas, moved over to retail energy, and then eventually led strategy and risk for a public utility. And it's sitting in the roles of risk and finance that the major problem being that molecules and electrons, they move quickly, but money moves slowly. And upon seeing that in working in risk and seeing that most of my day was being spent dealing with financial risk and not other risks that the company faced, like aging workforce, degrading infrastructure, It was all about the financial side of things, and it all tied back to how slow money moves. And so when I had the opportunity to first learn about Bitcoin mining, it just seemed like the perfect place to start, where you have an industry that makes revenue daily, and it just made sense that now they could actually pay for their power daily, and we could transform the financial side of the energy industry, which hasn't changed for over 50 years. So at Sonoda, what we do is, and primarily working with Bitcoin miners today, is we'll set Bitcoin miners up on daily or weekly payment schedules with their REP, and it has the benefit of reducing collateral and getting better pricing on the energy contracts.
All right, thank you each for kind of helping lay that groundwork. And I'm going to ask a question of each of you, a general question about ERCOT. Sean, you mentioned that Pablo is Vegas, right? The CEO, yeah, that he expressed interest in having 20 gigawatts of flexible load. How does ERCOT think about Bitcoin mining specifically? I know that they're neutral when it comes to power demand, but how would you think their understanding of these types of loads exists today? And is it when he's thinking of 5 gigawatts going to, or 4 gigawatts going to 20, is he thinking about the role of Bitcoin mining?
That's a good question. So, I think, and if you talk with different folks at ERCOT, you'll get sort of some different sentiment depending on what area of the business they work in and the complexity that's associated with that. I think what ERCOT has really tried to push for is for all Bitcoin miners or large loads that are flexible to become controllable load resources, in which case they would have access to you through SCADA and be able to kind of hit button on you if they need to curtail you. Today, it's more of a voluntary participation in various markets, whether that's ancillary services or demand response. To me, in order to grow the demand, one thing that was missing yesterday, and they had a whole panel on demand response, is that demand response has a fixed bucket of dollars. And as the amount of participation has increased, we've gone from the value of demand response being 70,000 a megawatt year to 60,000 a megawatt year to 40,000 a megawatt year. And so if you're increasing, the volume of participation, but you're not increasing the amount of dollars that's associated with that, it's going to be hard to get increased participation within that area of the market. So one thing that I think is a challenge and I think should be advocated for is another way to look at the value of curtailable load and really say what it is. Instead of having a fixed bucket of dollars, there's certainly, depending on the season of the year, there's a certain amount of megawatts that need to be procured to make sure that the grid is reliable. And within those megawatts, how much are you willing to pay for that? At this point right now, to build a generator, it costs $2,400 a kilowatt. Used to be $1,000. That's gone up significantly, and the lead time to get generation online, is going to be 5 years maybe. And so we've got this huge gap between now and 5, 6, 7 years as load is growing and not being able to bring significant amount of gen online. The interconnection queue taking longer for even renewable projects who also have problems getting sourcing materials and transformers and a lot of the same equipment that you use in some ways. I think that that they want to address the challenge. They want to encourage business to thrive in Texas and to grow the load, but I think that they're missing something in how that load is valued. And I think that they still have the sentiment, and this has been the case for a long time. I used to be part of the ERCOT stakeholder process. I was on the technical advisory committee for ERCOT when we were talking about resource adequacy in 2014 and 2015. And as a member of TAC, you're a voting member of protocol changes that goes basically once TAC approves, which is kind of the highest level of all the different stakeholder groups, it goes to the board, and the board pretty much rubber stamps it because TAC is kind of the one that does all the analysis, sends things down to other groups to be analyzed, brought back up, and it kind of goes through that, iterates through that process. But there's always been this sentiment of, having generators having a little bit more power in the market than load. And I think that's changed when they created, when they recognized the value of load is in some ways higher than generation. I'll just give you like a simple math problem. If you've got 50,000 megawatts of capacity and your load is at 8,000, you've got 4% of available capacity. And if you were to reduce load by 1,000 megawatts, what's the percentage versus increasing generation by 1,000 megawatts. And that percentage is higher by reducing load, meaning so you're going to have more excess capacity on a percent basis. It's actually better for the grid, so therefore there should be more value associated with it. And that's something that's hard to drive home because this market has been for a long time driven by the generators because they're the ones, they were kind of the big gorillas in the room.
And so, Scooter, we had a conversation a few days ago, from the perspective of ERCOT. How do you see the ecosystem of market participants and their understanding of Bitcoin as an asset to be leveraged, not necessarily the currency, but the nature of its flexible load? Like, is there, a very small understanding, or is it starting to scale?
I think at the levels that it needs to be understood, or it needs to at least be like challenge themselves to understand it, is actually almost not. I think it's almost non-existent, realistically, right? The way that generally a retailer or a broker or whatever looks at a Bitcoin load opportunity is really from a revenue standpoint. They look at, hey, how do I get this business, not how do we use this asset, right? So I want to hit on something. I think it's a really important concept, and maybe it's controversial, I don't really know, but one of the things for me, kind of being in a similar seat of Sean a few years ago, I ran an REP. I wanted us to become a Bitcoin miner. So there has been this bit of a fad or bit of a fashion over the last few years of Bitcoin miners being enticed to become their own REP, their own rep, serving their own load. It's one of the worst ideas that exists in this market. If your core business, Marshall knows exactly what I'm talking about. If your core business and focus of your business is consumption-based, it's a terrible idea. But if you're serving it and you can integrate Bitcoin load into your portfolio as an REP, it has massive benefits not only to your internal trade book, it has massive benefits if adopted at a wide scale, has a tremendous benefit to the ratepayer whose rates are constantly going up statewide. So maybe I don't know who lives where, obviously, but who lives somewhere in Texas in ERCOT? Not many of us do here in Austin because it's co-op. So Nick, you do, right? You know that. What's your resi rate? 15 cents. How's that sound as a miner? Impossible, right? You're dead. It's not even, it's a joke, right? I would argue that, so why is that? Why is a resi rate 15 cents, Sean?
Because, in big part, is because of their time when they consume and the fact that they, when prices are high, they're generally going to be using more than when prices are low because their demand's going to be higher because their AC or their heater is on.
And so when you have to go in and shape that product, you have to buy forward more expensive power, right?
That's right.
So it's an overweighting of the least efficient times of use that we have. I would argue that, yes, as you just said, and we talked about, I think the natural holder of large Bitcoin mining assets will eventually be the energy companies themselves for this particular reason. It's just math. If you have a gigawatt or 2 gigawatt or 3 gigawatt book of business in the retail space and it's very shapy, a lot of small commercial, a lot of residential, you can actually, and here's the second effects of that, if you buy a gigawatt worth of mining and you own it yourself, what are you going to do? Your economics completely change because you're not just focused on mining economics. It's accretive value to the business that you're running as an REP or a retail provider. So what you then do is you hedge a much flatter book. What else does that encourage? If you have a bunch of flatter hedges, more firm duration generation. That will ultimately benefit every single citizen in the state of Texas. And that, I think, is something that is certainly not contemplated at these legacy large reps. It's very complex. It's very complicated. It is very real. It's just a matter of time. I truly believe it's just a matter of time. So the takeaway there for me, if you're a Bitcoin miner, do not become your own rep. It's not free. It's expensive. You got to post credit to ERCOT or get credit support. This crap ain't free. If you are a rep, I would encourage you to get at least 10% of your trade book as a Bitcoin mine so you can have accretive value to your own book. and that will in turn make this competitive market even more competitive to the ratepayers. So that's my biggest item from how Bitcoin can really truly influence us statewide as a system. I think that's the home for it.
And so that is very logical from an end state. Maybe Austin, if you can talk about and explaining why we're going in that direction. If you could talk about, you made the comment that Bitcoin was really at the tip of the spear of innovation. We hear a lot about demand response, but can you talk tangibly about the different aspects of the value chain that's connecting Bitcoin miners to REPs, where that innovation is beyond just this, idea of demand response on a more mechanical level?
So I think, to build off of what Scooter said, he's envisioning a future where, Bitcoin mining is integrated with the operations of an REP, and it helps them manage their whole portfolio, their whole book of business for the larger customer base. One of the things that Bitcoin miners have done by being tip of the spear is they have been location agnostic and extremely price sensitive. And the other thing that they do, I've mentioned already that they are making revenue daily, and so the way that we are drawing today Bitcoin miners close to the REPs that serve them is through the actual financial transactions. It's marrying up the delivery of power with the financial side of that contract. And so in a lot of ways, we are taking a relationship that used to be sort of arm's length, where it's once a month, you're generating an invoice. There is, maybe not a lot of communication back and forth, to where now that communication is happening on a more regular basis because payments are happening on a more frequent basis, because the Bitcoin miners are able to see how they're using power and how much that's costing them every day. So I think naturally what's occurring in this space is the relationship is becoming more dynamic between Bitcoin miners and between the REPs. And so I think it's just one step towards this future of where they are more tightly integrated together.
And I think the innovation comes from not the biggest players in the book. They don't really have an incentive to change, right? They're the behemoths, they're the gorillas. Everybody will come to us, right? I think the innovation comes from, I think as we were discussing the other day, right? The kind of the smaller, the more there's more ingenuity, there's more innovation, to compete, right? And it's reps that are small, that are mid-sized, that are growing, that have to kind of think of different ideas to stay. Otherwise, you get blown off the field pretty quick.
Yeah, and I'm excited to be in that group. I've worked for I don't know, this is my third or fourth startup at this point on the rep side, and just being able to be nimble and flexible and transparent with our clients and try to figure out solutions with them. Given the complexities of the market that we have today that didn't exist 5-10 years ago, is kind of a fun place to be, and we get to create things as we go. So I look at what Austin provides here with Synota, and we have some customers that are on his platform. And what does that do for me? Well, it reduces my AR concerns, or accounts receivable, from my clients. It also encourages higher cash flow for me, where my working capital needs as a supplier to serve load is a lot smoother than if I'm collecting on a net 20 after 30 days, which is a typical kind of energy contract for most customers. So you look at this market segment of miners and the risk associated with it, and I see like twofold really, and this is what sparked the innovation that Synota provides. And there's another piece that I think is a little bit harder to solve. So one is my AR risk, right? Like making sure that I'm collecting, you guys are paying your bills, we'll continue to serve you power. That daily settlement capability really helps, reduce that time that's needed, that time that I have to float the dollars to you. So I'm still sort of on a day or two lag on collecting the funds, but it's much better than 30 or 40 days. But the other thing is mark to market, and mark to market is a little bit harder to solve, right? Where if you were to hedge out, and I heard one of the panels earlier talking about hedging and $50 power and how that doesn't look very good when your break even is, in a place where that doesn't give you enough profitability. But there's some other things to think about, because when you curtail at $100 or wherever your curtailment point is, and you have a $50 hedge, well, guess what? You're selling that power back You're getting paid for that. So don't look at the $50 block as just a $50 block. You need to kind of average out like what it's going to be after you do all those curtailments. So, hedging is risk management. Of course, you got to have a profitable business. There's more to it than just the price that you see at face value. And that's one of the things that we help our clients and our partners understand and try to help even do the analysis for them and say, hey, this is what it would have looked like in 2020, 2021, 2022, all the way, until recent. Looks like shit, because in a good way, prices were really low. But if you had a hedge on, I wouldn't call that a loss. I mean, it's risk mitigation. You're going to pay a premium for something.
Well, and I'll also say from a technology standpoint, from what you provide, right, from the REP's eyes, what you guys may not see, you're paying daily. Which is great because also the REPs owe money to ERCOT the next day, and like you have to pay it, right? So credit is a real thing. It's been a great solve. I feel like I was happy that I was an early adopter, and we worked together on a lot of different things. I told a real quick story. I mean, several years ago, I got a call out of the blue from one of the major retailers that are out there. I mean, massive, right? And they're like, "Is this Scooter?" And I was like, "Who's calling? Yeah, well, what do you want?" I'm so and so, blah blah blah. Who the fuck are you? And why do we keep losing deals? You guys are nobody. And I'm like, well, maybe we're taking chances and adopting things that you aren't. And they were like, what do you mean? I was like, I don't feel like telling you, But that's the game that gets played because when you're on the field with multi-billion-dollar balance sheet companies, you have to be sharp and smart. Like, hey, we're all, for the most of us, right? I mean, this is America. The American Revolution was not won by lining up against the British and trading shot for shot. We had to get creative. We had to get guerrilla, right? That's the only way you win, and that is where that innovative spirit. It's a great market that we're in. Texas is great for it, and we have to keep pushing forward. And so that's when we say, hey, that innovation is going to be coming from the guys that have to innovate to survive. Those are the types of things that we mean. And then you can take those lessons and proliferate those practices and technologies from the small guys all the way up to the big guys. And it's exciting to see. It's been a tremendous, as an observer, as a participant. I think the last 3 years in ERCOT has been some of the coolest shit that I've ever seen.
Austin, can you speak a little bit to, adding on to what both Sean and Scooter were talking about there? What is it? I mean, we know the flexibility side of Bitcoin miners adding value, but what is it on the payment side that allows for this, not necessarily real-time settlement, but if Sean was working on a net 20, now on a net 1, is it because Bitcoin miners are being paid with consistency? Is it their scale? What differentiates Bitcoin mining to help on this settlement side?
Well, you nailed it. I mean, it is the fact that Bitcoin miners are in the best possible position to pay more frequently, given that how their revenue comes in each and every day from the pools. So what's important there is that there's also an incentive because the market still largely views Bitcoin miners as less than creditworthy counterparties. And so it's in that realm that Bitcoin miners are not given any special treatment when it comes to signing a power contract. They're going to typically be asked to prepay for energy. They're going to be asked to post lots of collateral. So it's in that environment that they can really take advantage of the thing that they have, which is consistent daily stream of revenue.
It's not even special treatment, it's punitive.
Yeah, it's punitive. So opposite of special treatment. And I think, just to build a little bit from the financial side, but it does go back to what these guys are saying in that when you take where the finance piece comes into play, and it's important, is that when you remove risk from the equation, it's really interesting. And we see this all the time, and these guys are doing it. It's the world opens up in terms of possibility and conversation because now you're not talking about, hey, this is a big invoice coming. When's that wire going to come through? The conversation can be more focused on how do we optimize what we're doing today? How can we get creative? And so I like to think that, what Bitcoin miners have the opportunity to do is to be collaborative because you're taking the stakes from a financial standpoint, from a risk standpoint, and you're lowering them. And so now you just get to say, well, how do we do more of this and do this better together? One
last question, then we'll go to Q. Do we have Q&A? Okay. Sean, you were talking about the creativity side, and Scooter, you talked about kind of flattening the book. Sean, do you see Bitcoin as a tool not just to hedge your portfolio, but to help drive growth? And if so, how?
So So it can be. It isn't always. For most folks, all we see is index contracts. So that provides no additional value to me, in terms of optionality, if there's no hedge in place. Now, it doesn't mean that you're not a good customer to me. Bitcoin miners are generally very large, in the grant, relatively speaking, right? So I don't care if you're 2 megawatts, 10 megawatts, 12 megawatts, 5 megawatts. That's a pretty big customer as it pertains to, traditional commercial industrial. Yeah, I know there's some that are hundreds of megawatts, but there aren't that many customers across the state of Texas that are in the hundreds of megawatts range. So we like to help, with the folks that are 2 to 25 to 50. I mean, we'll go larger, but this is I think where we've found a good niche for ourselves. So I think to the extent that you're willing to hedge, find a product that hedge. If I told you that I could hedge, 80 to 85% of your load, and it would cost you less than $40 a megawatt hour, would that be interesting? Because I can create a product that does that. I can also say, hey, if you want to hedge 100%, but I cap your real-time settlement point price and effectively create a call option for myself, I could do that too. Instead of paying 50, you're going to pay 42, or I'm going to pay you essentially for that option via a lower rate. So those are some of the ways that kind of load being in our portfolio can help. Otherwise, all I'm doing is taking the small adder that you guys drill us down to, and help cover my collateral needs with ERCOT. Because effectively, from ERCOT's perspective, as it pertains to Bitcoin load, I'm short. I have zero hedge in place, and therefore, whatever load that there's going to be collateral requirements that I have to ERCOT because you're running short in the market.
Short obligation at a wholesale level.
Yeah. And then when you get to hedging, then I'm paying somebody else collateral for mark to market through my counterparties. So I think it just depends on where it is. I mean, I think for me, like adding more customers in this space to my load just helps with our scale. It allows me to go out and buy credit. There are credit products in the market that wouldn't be accessible to a customer like you, but are accessible to me at a certain size. And so once I get to certain size levels, there are ways that we can be more creative, and I can work with you guys to essentially lower your costs to serve.
I know we're tight, but could I just one thing?
Yeah.
The term, you mentioned it earlier, there's a lot of legislation, there's a lot of policy discussion that's happening. It's awesome. It gets thrown around and it's kind of casual. There's real implications there, and I would just challenge everybody in the room to really think about what that means about making that trade. Once you make that trade, it's hard to go back. What I mean is, as a Bitcoin miner, to me, it is antithetical to hand your asset over to a governing body. And that's what controllable load resource is. There are complex issues and complex problems, but trading sovereignty for quicker access, it may sound okay right now. And I'm not saying that it's necessarily wrong to do, but I think it requires a lot of critical thought of what this community is willing to do. Are you willing to let ERCOT determine if you are mining or not? It is out of your control. Once it's given, it cannot be taken back. So I would just challenge everybody in the room to really put some critical thought into what that means philosophically, what that means economically, and just what it means and how it aligns with this community. I would just challenge everybody to take a step back, take a minute, and if that's a trade you're willing to make, okay, but do it with critical thought.
All right.